Hello, everybody. Welcome to Wednesday. The S&P 500 was up 2% today. Really good day. We finally get the big bounce I started talking about last week. I follow an index. It's called a relative strength index. And essentially, when that gets below 30, the market's considered oversold and due for a bounce upward. It got down to 26 in this particular downturn that we've had, which isn't, the bottom. We actually hit 20 back in 2020 during the pandemic. But that was more of a, big fear event that was driving things down, to a very oversold position. We don't particularly have that here, not that type of level, but a 26 is pretty low, and you're bound to get some type of a bounce usually once you see that. And so we did, and we jumped up today, and now that relative strength index is above 30. It's at 35. I do suspect here, we'll get some type of continuation in this run. There's a little bit of a barrier at 37.50 and another barrier at about 38.50. So, might move up into some of those levels here. Just again, usually once you get some type of a pop, there's some, movement forward from that. We'll see if that can continue. It's a long ways from here to get back to, what looks like a primary motion upward market getting through the 200-day moving average and those types of things. But you never know. And this was the one spot where you kind of draw the line in the sand and say, okay, this is the low that we hit back in June. We got a little bit below that again here, lowest point for the year. And now it's starting to rally up. And so it could be a point where the market turns around and starts to come back up. And so we'll see how this plays out. Obviously, if we fall below this, I feel like there's a big jump downward that could happen just because there's not a lot of support below where we are right now. Most of the things that are out there news-wise are kind of negative. It doesn't mean that you can't have a turnaround. Again, I've mentioned this before, but March 9th of 2009 was the bottom of the 2008 downturn. And I very specifically remember that there was no good news happening at that point in time at all. And yet the market turned around. There were some things that were happening that aren't happening now with different stimulus packages and bailouts, lower interest rates, and those types of things. And it's one of the problems we're having now is that the government isn't going to be able to step in really to help here because it might be inflationary. In other words, sending out stimulus checks could be inflationary. Going through, buying bonds like the Federal Reserve is doing is inflationary. So obviously they're actually doing the opposite right now. They're selling off their bonds. So the market's kind of caught in this high inflationary period where things are starting to slow down, and there won't be any way to kind of save that slowdown with some of these different packages that have happened in the past. So we'll have to see how this plays out. It'll really probably just come down to how the earnings come out as far as that goes and whether these companies can weather this or not. And so we are going to be heading into earnings season at some point here very soon. And so we'll see how that plays. But nonetheless, good day today. And so we'll see how that plays out going forward. And, we'll just keep watching and see, where this market goes. And hopefully it does hold that bottom. And then we can get back into our normal models and go on our way. But, we're still going to be very cautious here because the market has an overall downward trend that we have to deal with here. So anyway, look forward to talking to you tomorrow. Thank you.